Welcome to the TAC Index AI podcast, where we blend TAC IP data, reports, and charts with the latest news in all things logistics with a focus on air cargo. Our mission today is, well, a deep dive into the latest numbers. We want to see how air cargo is navigating some pretty significant geopolitical shifts and, how that's impacting not just global logistics, but maybe the broader macro market too.
And we have some incredibly fresh data from the TAC Index to do just that. The central takeaway, it's a market in dynamic flux, really dynamic. We're seeing a major decoupling, kind of a split in air freight rates. And that reflects these deep supply chain shifts driven by, well, ongoing geopolitical friction and tariffs.
Okay, let's unpack that, this fragmentation. Globally, the Baltic Air Freight Index, the BAI Berger, our global benchmark, only edged up 0.3% week over week, just barely. But, it's still down nearly 6% compared to last year. So that flat headline, it really masks some serious regional divergence, doesn't it?
Oh, absolutely. What's fascinating here is how clearly you can see policy changes hitting specific origin markets. So rates out of Asia are generally slipping. Hong Kong, the BAI 30, eased down about 0.6% week on week. And this decline, it seems directly tied to the impact of the de minimis exemption ending in the U.S.
Right, the de minimis. For our listeners who might have heard that term floating around, can you just quickly remind us why ending that is such a big deal for air cargo?
Sure. So that exemption basically allowed loads of cheap direct-to-consumer goods, often small parcels, right, to enter the U.S. completely tariff-free. Closing that loophole is forcing massive shifts. You see parcel volumes moving, consolidation points changing away from traditional hubs like Hong Kong and China. And that disproportionately affects the kind of fast, high-volume stuff that typically moves by air out of Asia.
Okay, that makes sense for Asia slipping. But then why are rates out of Europe and North America actually climbing? Frankfurt, the BAI 20, that rebounded 3.8% YoW. And Chicago, the BAI 50, bounced a huge 10.4% YoW. Is that Chicago jump just like a temporary inventory thing, or is something more structural happening on the Western end?
It could be a bit of both. Chicago is often quite volatile, so that might suggest a strong, maybe temporary burst of demand or perhaps some capacity tightness. But the European bounce feels, well, more structurally sound. We saw very specific detail hitting rates from China to Europe. Remember the sudden closure of the Polish border for rail freight coming from the east?
Ah, right, the rail disruption.
Exactly. When a major overland logistics route like that breaks down, air cargo becomes the immediate fallback. It's like the insurance policy.
Right.
And that quickly tightens capacity and naturally pushes rates up on those specific lanes.
That kind of structural stress test really suggests massive operational changes underway.
Yeah.
So what are the big logistics leaders seeing on the ground? I saw the head of DP World saying trade isn't actually slowing down, it's just redirecting.
Precisely. Sultan Ahmed bin Sulayem from DP World notes that despite all the geopolitical stress, trade itself is, quote, very resilient. Tariffs aren't stopping trade. They're just moving cargo that maybe can't be absorbed by the U.S. anymore to other parts of the world. He specifically mentioned a big, consistent increase in trade flowing into Africa, for instance.
And this is where we really see the global logistics map being redrawn, right? The emergence of these new corridors. We're seeing major momentum, apparently, in the middle corridor route. That's moving goods from the Far East through Central Asia all the way to Warsaw, and kind of out of nowhere, the sudden emergence of Uzbekistan as a key trade country.
That's right. Yeah, Uzbekistan's emergence is a great little case study in how geopolitics creates opportunity. It's opening up, positioning itself as a central logistics node for goods, trying to find alternative routes, away from the traditional and now stressed Russia-centric paths. Even DP World is responding. They're expanding, upgrading facilities in places like Syria's port of Tartus. It just highlights that having multiple routes is becoming essential. It's risk mitigation.
Okay, speaking of costs, especially running these new, maybe longer, more complex routes, we can't ignore the fuel factor. Huge for air cargo profitability. We saw U.S. distillate fuel stocks, and that includes jet fuel. They fell by 1.7 million barrels last week. That leaves them, 8% below the 5-year average? That seems significant.
It is significant. That shortage pressure on distillates definitely tightens the squeeze on carriers, and it links this whole logistics story directly to the macro market. Look, the S&P 500 Energy Index was up 2%, wasn't it?
Yeah.
Tracking higher crude prices. Inventory instability like that, it just signals inflation risks bubbling up in the energy sector.
And the broader macro picture certainly seems cautious. Wall Street indexes slipped a bit after the Fed flagged highly valued asset prices. Although there was that surprise surge in U.S. single-family home sales in August. That could complicate things for the Fed, Maybe less room for rate cuts if consumer activity picks back up.
Yeah, it's a mixed picture. So if we connect all these dots, we've established a clear tension for you listening. Air cargo rates are diverging regionally quite dramatically. Global trade is proving resilient, but it's shifting, moving towards new infrastructure.
Yeah.
And all the while, that underlying fuel pressure is firm, increasing costs for everyone involved in this massive redirection.
Right. So the key takeaway seems to be that logistics isn't freezing up. It's adapting and fast. The old map is, well, kind of defunct. The trade map is being redrawn in real time with a new focus on redundancy and resilience. So the question for you to maybe think about is this. Which of these new emerging trade corridors, whether it's the middle corridor or those growing routes into Africa, which one is actually best positioned to structurally capture the largest long-term share of that market being diverted from the traditional Asia-West lanes?
Definitely something to think about as you navigate the changing currents of global logistics.